Good afternoon. This is Brian Split with Allendale here on Monday, September 27th, 2010 with your closing commentary. Starting off with the grains, we did have some mixed trade today. The corn market finished lower. December contract down 9 cents at 5.12 3/4. The diesel 11 contract down 5.5 at 4.84 1/4. On the soybeans, we did finish higher today. November beans up 2.5 cents at 11.28 1/2. The Novi 11 contract up just a quarter penny here today at 10.98 1/2. And on the wheat, December wheat was down 13.5 cents today at 7.06 1/2. The July 11 contract down 9 3/4 at 7.34 3/4. Now, as far as the corn market today, we had actually some very similar trade to what we saw at the start of last week. Last week we opened up with some new highs for the move overnight Sunday night. We did not even test those levels during the day and saw selling take over for the rest of the session. That's kind of how it panned out today. And really at this point, if that's going to continue the trend from last week, any little rallies that we get in this corn market may be sold into. But we got to watch out for the quarterly stock report on Thursday. That's going to be the next piece of fundamental information that's going to possibly move this market. And if you're a bear waiting for a signal to sell, really at this point you can't really get too bearish unless we take at least out the low from last week at 4.95 1/4. So that's our last swing low, and we did rally aggressively off of that point. So a low below that 4.95 1/4 may be a signal to take a short stance at the market here. And we are looking for the harvest results this afternoon to come in at 25 to 30% harvested for corn. On the soybeans, we did settle a tick above Friday's high. We're continuing to follow this breakout above $11. And again, very similar to last week, we had a sharply higher trade overnight on Sunday night that was met with some selling during the day session on Monday. The rhetoric that we've got dry weather in South America and continued and persistent buying by the Chinese of our U.S. soybeans, that is being cited as the fundamental reason for this rally. Other than that, we are looking for the soybeans to be 18 to 20% harvested on this afternoon's numbers. Over on the wheat, we did have reports overnight that Russia is hinting that they may be able to lift this ban by the end of the year. We've already had their prime minister come out twice after that and say that that was not the case. So, make up your mind, Russia. Either you guys are going to go ahead and lift your export ban, or it's not going to be till next year. But we've heard you guys go back and forth 3 or 4 times now, and I'm getting a little frustrated with it, and I'm sure the wheat trade is as well. Now, as far as the weather front goes, we are going to be looking at some cooler and wet weather in Russia to help with their seedings. And again, that in combination with some of the other bearish information that we've gotten over the past 2 weeks has made the wheat market a favorite weak leg of some intermarket spreading. Last week's commitment of trader report did show that the managed money reversed their long position. Did look like there was some fun buying at the end of the week on Friday, so we'll have to see where these funds are at the end of this week and if these guys are going to change their tune and go short this wheat market here, bigger picture. Moving out to the livestock, we did have cattle higher today. We've continued to see a good correlation between the stock market and cattle, and that is still intact. Midday we did have beef prices higher. Looks like 11 cents higher for choice and 38 cents higher on the select. Over on the hogs, we did have the hog and pig report on Friday. That was more neutral. We are seeing cash hogs trading very stable, which typically this time of year we are starting to break, and that is supported right now by fund money and by the price of corn. On the outside markets, looks like the equities are trading flat as we go into the last half-hour trade. Crude oil finished 3 cents higher today, so we can call that flat. And right now the dollar is down 9 points, continuing its downtrend with new lows for this move. And it looks like 80 to 80.15 is going to be your short-term significant resistance on this dollar contract. So that's about it. If you have any questions over anything or want to chat about the markets, especially if you're looking to get something done ahead of our quarterly stock report, please give us a call. Our phone number is 1-800-2-MARKET. That's 1-800-262-7538. Or you can check us out online at www.allendale-inc.com. And good luck to you trading the rest of the week.